What is going on, everyone? My name is Kyle. I am a full-time options trader and founder of Opinicus Holdings, the premier options trading community. I wanted to take a look at the SPY chart here and talk about whether or not, as traders, we should be operating with any sort of bias heading into this week, heading into the next few weeks. And so, to answer that question, with a very straightforward answer, I'm going to have to say no. And the reason being is because we are primarily, if you look at this roughly 9-month chart, almost a 1-year chart, we're basically trading within a range. I mean, this is a very, very wide range, but we're mostly unchanged over the past 9 months, over the past 6 to 9 months. And so we can talk about, this bear move and this explosive rally off of the lows and things like that. But what I want to primarily focus on is where we are in terms of location, looking at a little bit of the big picture. So if we go ahead and zoom out here, you'll pretty much see that with volume profile on the screen, SPY, the S&P 500, has continued to trade within the value area. And so that means that 70% of all of the volume has been done within this range. We can see that the chart very obviously here is range bound. And so I'm not going to be operating with any bias until we have something a bit more to work with, more structure, some type of new move or anything like that. Now, as far as levels to be watching, depending on whether or not you are bullish, bearish, or operating with no bias like myself, we still want to be paying attention to the key levels on the chart so we can establish risk and use those levels to establish risk against and kind of be trading with the overall trend of the market. Now, as day traders, primarily, we're going to be looking at, those near-term setups to be establishing risk against. And the first thing we want to look at in the near term is how we've been trading over the past few days. And what we can see here is a 3-day range. So we've got a near-term range to work with. What I'll be primarily doing heading into this week is watching how the range breaks. Basically, what that means is I want to see a move through 450 that holds, or a move below the 443.5 that holds. In between this range, I'm going to be even more neutral, operating with no bias at all. I may trade against the edges of the range, but primarily will not be operating with any bias within there. Now, if we start to break the high of 450, I will be a bit more bullish in the near term. And the reason being is because 450, what we have here is directly above this near-term range. We've got the 200 MA at around 448 or so. Then we've got the year-to-date volume point of control. So if I put the chart starting in early January 3rd there, you can see the volume point of control here at 450. And so ideally, what we're looking for if we're bullish is price action trading above the 200 MA and the year-to-date volume point of control. That's going to put us into this pivot zone, which has been a quote-unquote challenging area for the index in the past. You can see the resistance it had here, a little bit of congestion through there. Then it went ahead and held as support. Nothing here, just sliced right through. Resistance, and then a bit of an overshoot here, but we can go ahead and call this congestion and resistance as well. And so this is going to be this highlighted zone that I have in the 453 to kind of, let's see exactly where that is. 455 to 452 area is going to be a key reference zone to continue to monitor. So above 450 does not give us much upside before we are testing this zone. So that is absolutely something to keep in mind. Now, the additional thing here, if you are bullish, is to look at how we're pulling back against this 11% move in the index. Now, this was an 11% move higher in as many sessions. So we pushed 11% in SPY in 11 trading sessions, which is a very fast move for the index. Now, if you're bullish, your thought process is that this is just a normal pullback into the fast MA, or excuse me, into the 21 MA and the 38% retracement level. Totally normal pullback if you're bullish here and you believe this is the start of a new bull move. Now, for our downside reference points, what we want to be looking at is a break of the lows of this near-term range, as I mentioned, which is going to put us somewhere in the 443.5 area. You could go ahead and call that 443. And below that, what we have is the start of a volume shelf directly at 440, just looking at this big range here we looked at the start of the video. And so we've got a bit of a volume shelf starting right here, which coincides with 440. If we went ahead and just drew a line right here, yeah, you'd see that this is 440, 440.5, close enough. And then we got the 50 MA there as well. And in addition, you've got your high right there, some reference right there where it respected the 440, as well as right here on the chart looking back, and then all through here as well. So 440 is absolutely a key level to be monitoring. Below that, again, if we're bearish, just keeping these reference points in mind, we have the volume point of control right down here. And let me just verify what this level is at. It's going to be at the 434 area. And so we will consider this absolutely a key reference point as well, the 434 zone. Below that, we start to get into that pivot as well, that support pivot area in the 428 to 430 zone. So a lot of zones here, but that is how we want to be treating these support and resistance levels when we are trading in a volatile market. We're going to be treating everything as a zone, because remember, this just has to do with supply and demand. And so ultimately, I'm going to be operating until, at the very least in the near term, we see a break of this small range here in the 450 to 443 area. We'll be operating with limited bias, likely trading against the edges of the range until we see something like this, a breakout, perhaps a retest, and then fresh highs, or on the contrary, a breakdown, maybe a retest, maybe not, and then, probably some test of this prior support as well. So those are the two bullish and bearish scenarios that you want to be keeping in mind for the index here heading into mid-April, heading into earnings season. Hope you guys enjoyed this video. If you have any questions, please feel free to leave them in a comment below, or you can always reach out to me in the think tank. That is it for now, and I will see you in the next one.